Hello, welcome to the first lesson of Know Your Worth. I'm very excited for you to be here. In today's lesson, I'll discuss building a firm foundation for your business by deciding on a business structure. We have two goals we'll accomplish with this lesson. First, we'll make sure that you have a business and not a hobby. Then I'll go through each business structure option with you to help you understand the tax implications of each so that you can choose the one that's best for you. If you haven't done so already, I recommend printing out the lesson guide. All right, let's get going by talking a bit about whether you have a business or a hobby in the eyes of the IRS. I know many of you are here because you have a passion or a side hustle that you're turning into a profitable business. But just because that's what we want doesn't mean the IRS will see it that way. You'll need to make sure your business has the ability to make a profit and that you can show you really intend to make money doing this. If not, the IRS won't consider yours a business and you won't be able to take business deductions, which means less money stays in your bank account. The main questions to consider are on the screen, but there are more in our lesson. You can pause this video here and read through all the questions to make sure you're right on track. All right, next up, it's time to choose a business structure. I do have a little disclaimer here. Remember that I'm a CPA and not an attorney. I'm coming at this topic from purely a tax perspective. If there's more than one owner of your business, I would recommend contacting a local attorney that specializes in small businesses. Okay, there are 4 main business structures to consider, and each have their own pros and cons. The first one is sole proprietorship. This is the easiest business structure to form because there's just one owner, and it's you. This type of business begins when you make your first sale. The biggest pro for a sole proprietorship is that there's not much paperwork involved with the setup. There's actually 0 paperwork as far as the IRS goes, but check with your state to see what's required locally. If this feels too easy for you, I promise it's not. You do not have to jump through hoops to create a business. Now, the downside to having a sole proprietorship is that you can be held personally liable for any financial obligations. So if someone sues your business, they could actually come after your home, your car, and personal checking account. As far as taxes go, sole proprietors file a Form Schedule C with their personal tax return. We'll talk more about this in Lesson 3. The second structure you've probably heard a lot about is the single-member LLC, or single-member limited liability company. The biggest pro for an LLC is that you have more protection against your personal liability if your business is sued. But some clients consider it a headache to keep their business and personal purchases separate, which is an absolute must if you have an LLC. To set up an LLC, each state has different requirements, but usually it involves filing paperwork called Articles of Organization or something similar. You'll also want to look into annual fees prior to setting this up. Some states don't have any annual fees, and some, like California, can have fees up to $800 a year. As far as taxes go, as a single-member LLC, you'll be treated the same as a sole proprietor and file your taxes the same way, with a Schedule C. The third structure you might consider is a partnership LLC. This structure has the same pros and cons as a single-member LLC, and it's created the exact same way, by registering with your state. The tax filing is different here, though, because you'll file a Form 1065 partnership return. If you decide to have a partnership, I would definitely recommend working with a small business lawyer to help you set up your partnership agreement. The last structure we're going to discuss is the S Corporation. The biggest pro for going with an S Corp is that you may save money on taxes since you'll only pay income tax on your business profit instead of self-employment tax and income tax on all the revenue the business brings in. The biggest headache with becoming an S Corp is figuring out a reasonable salary to pay yourself. If you aren't netting around $50,000 a year and aren't ready to pay yourself a salary, you may want to wait before considering the S Corp election. Another con to consider is that once you're paying yourself and any other salary, you'll need to set up payroll, which usually runs about $600 a year in payroll software fees. To become an S Corp, you first have to be an LLC or a C corporation. Then you'll file an election form with the IRS requesting S-Corp status for tax purposes. To file taxes, you'll file Form 1120-S, the S-Corp tax return, which is actually due 1 month earlier than your personal return. All right, over to you. It's time for you to make a decision about which business structure you'll use to start out. When you've decided, I'll meet you in Lesson 1, Part 2. See you there.